The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Hello everybody, this is Noah Davidson with tackletrading.com, here to give you a quick market overview heading into Friday's open. Absolutely fascinating setup in the market. Probably the first place we need to start talking about is what's coming up on the economic calendar. Pop into our trade center here, go look at the economic calendar. The first Friday of every month is a big economic report rollout where they roll out the non-farms payroll report. They roll out the ADP unemployment report. We can come in here and we can look at what's going on with the unemployment situation, what's going on with international trade. These are big numbers that will be coming out before the market opens. So unemployment situation, the unemployment's been lingering down around 6.1%. The market's forecast and expectation is for more of the same, and it really kind of comes down to expectations and outcomes. So if we see the outcome of that data, that the market stays with the 6.1% unemployment, a slight downtick would be a benefit. An uptick in unemployment might be perceived as a negative. We also have the international trade data coming out as well. Again, it all comes down to expectations. We want to keep an eye on those numbers. We'll have a pretty good idea if we watch the futures and commodities trading going into the open, whether or not the market's going to remain as bullish as the signal indicates. Now, the market's had a pretty rough week getting beat up here. Got a chart of the Spider S&P index, and the market again has had a huge drop down, couple moves down. And Thursday's price action started heading lower, but rallied into the close on above average volume. Now I've got a chart here of the E-mini S&P futures, and I went and popped in a ton of data here. And I went and drew a long-term trend line off of the pivot low, significant pivot lows, and we're down right at those pivot lows. Now the big picture is the slowing momentum at the top setting up to, and here's a classic double top M for murder across the channel. Now probably one of the interesting things about the market crossing the channel is that this is from top to bottom a pretty good sized dip for the market. So I drew this little trend line here to kind of take a measurement of previous market drops to kind of give you a ballpark of when the market goes into a correction, that's a pretty good size correction for the market. Now there's nothing to say it can't go a little bit more than, but we are currently sitting at that size range down. Now that's what I call range down. Now the interesting signs for the market, and I honestly think it'll end up going whichever way that economic data points, but if you look at this price action as it moves down, and we see the volume going up and creeping up here. We had really good positive volume here. Boom. We had really good positive volume here. The selling volume has been kind of typical, and it was increasing, but that spike there is kind of a big sign. When we look at the actual, the spider, the SPY, we got the same thing, kind of a hammer candle, a big, strong amount of volume on that. So in my mind, that really kind of tells me that there's some institutional buyers stepping in, potentially buying this dip. Now we have to be cautious with that, because if the market does give way and the trend zones violate and we see it break down, that could end up leading to more fuel for the bears. So keep that in mind. Those economic numbers are so important coming into this market. One of the other things I noticed was that the mini contracts for the Russell 2000 came in and they rallied really hard off of support, showing a bullish piercing line candlestick. And when I say hard, what I'm really talking to is they had really strong volume. Now those strong points of volume are what we typically will see when we see support form. So above average volume, very common to see above average volume as support pivots and resistance pivots form. So that above average volume at the key price point, piercing line candlestick on the Russell 2000, that's a bullish signal. Let's check out the Dow. Dow has a hammer candlestick as well. an area of support resistance, part of the channel trend, and above average volume on that hammer. Let's take a look at NASDAQ and Q. Just a little bit of a drift, not hard hit in a big technical zone, and again above average volume with a morning star candlestick. Now, morning star doji type candlestick. Now, all of these signals are pretty much giving us the same information, that the market has bought on the dip and is building into some support, but it really, in my opinion, is going to come down to how those economic numbers come out. If there's a downtick in unemployment, I think the market's going to rally really hard. If there's an uptick in unemployment, there's going to probably be some disappointment, and we might actually see a failure of this trend buy zone, which could be a big, strong signal for the bears. Now, keep in mind, October historically has been one of the roughest months for the market. And it's when some of the major big economic turns and market crashes have occurred. Now, that being said, the fourth quarter is also oftentimes the best time for the market. And I ran out and I ran some bullish scans, and I looked for some candidates that I would have comfort buying, that I'd like to take an action at. And when I came up with one of the stocks I like is ACT. This is a pretty strong candidate, fundamentally strong in a big technical zone of support resistance, upward trend. It's been coming down. It's getting towards what I would consider probably a buy zone. This particular stock, I need a buy signal because I've got down. The volume's been waning. And we saw some nice buy volume on the breakout. And this one just needs to give me a signal. I'm keeping an eye on it, watching it down here at 231. So ACT has got some potential. Ran some bullish scans and ran across a few interesting ones. EEP, not a stock I'm overly familiar with, but it's got a pretty cool pattern set up here. Old support resistance zone in a trend zone with a signal type shadow on the candle. Volume picture really nice on the breakout, tapering volume down, starting to spike at that support zone. WellPoint is an interesting stock setup as well. Old resistance support, retracement down into that buy zone with the doji candlestick. State Street is one of the prettier charts. Nice support resistance neighborhood, 50 period moving average, hammer candlestick on big volume. Love that. Great bullish candidate. Bank of America, boom. Nice little drift in this like bullish flag pattern, pop, bullish flag pattern. It's right here in that bull area, high wave doji candlestick with a buy volume signal. Now, this is one of my favorite ones because, hey, we're somewhere in the world there's people getting bombed. Norfolk Southern, big defense sector contractor, broke to new highs on good volume. We've got strong volume here on a pretty volatile up and down at support resistance. Bullish Harami candlestick. This is probably my favorite pick of the bunch. CNC, great looking little pattern, broke through resistance and pulled down. Shadow doesn't have a real pretty volume picture with it. It's not ugly, but not pretty, but not too shabby. And then another one, Vertex, another pharmaceutical stock like CNC. Big pop, waning volume on the retracement, shadow. Interesting candidates. Now, how you trade those, there's a lot of different possibilities on that. How you build out and structure trades on those. I'll come back and do some segments tomorrow discussing about those segments this on Friday here, talking about those things. So if you like what you see here, keep coming back. We are enjoying your company here at tackletrading.com. We appreciate our contributors. I want to give a couple of shout outs real quick here to a couple things here we've got on Tackle Trading. One, got a nice article sent in by one of our pro members, Melanie, who sent us a nice little article on mutual funds from Forbes magazine that just really breaks down all those hidden costs, all those hidden fees you see in mutual funds. One of the reasons why our members come here and have taken control of their financial future by learning how to trade. Because, man, in my opinion, absolutely, mutual funds are an absolute raw deal. They so many fees, so many hidden fees. And I want to give a real big shout out to another member of TackleTrading.com, Luis Arturo. Luis has been in contact with me, and we've been talking a little bit, and I can tell you that guy has done an amazing thing with his account. Huge ROIs. Started out and has gone, just blown his account up huge, making big gains. Just a shout out, congratulating you on your great success. Having a great time here. Appreciate everything you guys do. Look forward to seeing you in the clubhouse, and look forward to your contributions, your commentary, your questions, and your team membership here at tackletrading.com.
Get in the game. www.tackletrading.com